Kathleen, we've all been wondering what Airbnb's numbers look like. Now we have a glimpse into their financials and also how hard a hit they took in the pandemic and how they are recovering from that. What are your big takeaways now that you've seen the numbers?
Well, the company doesn't look as bad as we might have expected. This company's been able to grow 30% a year and produce positive cash flow because bookings are paid up front. So the company's had a pretty good financial picture historically. Then it took the big hit this year. And in the September quarter, we saw a drop of 70% in revenue. So the company was really hit hard by the shutdowns, but it is starting to recover from this. And with the restructuring that they've had, they cut 25% of their workforce and they significantly cut their marketing spend. I think it may be a better company, a more efficient company, and is going to benefit as the economy opens up. You can already see that other stocks in its group, such as Booking Holdings and Expedia, have all had some very strong trading as the market is anticipating the improvement in the results for all these companies once we get beyond the at-home phase and everyone gets out to traveling and booking rooms.
Now, as Airbnb went through this restructuring, they pulled back on a lot of experimental and exploratory things, hotel, flights. They are still working on experiences, but the company, and CEO Brian Chesky has told me this, is very much going back to its roots, home and apartment sharing. Is it as exciting a company, as big a growth prospect without all those other bells and whistles, or is it in fact a better company without those bells and whistles?
We think that without the bells and whistles, the company's going to have a really good focus. There's no reason why it can't get back on its growth trajectory and expand further in this existing business internationally. I mean, we've always been impressed by the fact that Airbnb, in 12 years since its founding, took about a 20% share of the vacation rental market. That is a pretty good achievement. And just in its existing markets, it ought to have very good opportunity. So obviously you want to expand in an efficient way. And I think having gone through this, we expect this company to be very focused and not to be fooling around too much with investments that may not make sense.
So outside of Airbnb, what companies are you watching as we round out 2020? We're expecting some other potentially big IPOs, DoorDash, Affirm, Wish. What are you watching?
Yes, well, the market has been so good for investors that have been investing in the segment. The Renaissance IPO index is up almost 80% so far this year. And that means that investors in the companies that have gone public are doing well. And good returns beget more IPOs. So we have a rush of IPOs we've been seeing since the summer. And this year, 2020, is going to be a record year in a long time for IPO issuance. In some ways, some of the months we've seen recently kind of look like what we had 20 years ago. So we really have a big number of companies lined up. A lot of billion-dollar IPOs, as you mentioned. DoorDash, we think will be a $2 billion or so IPO. A lot of interest in it. It is a segment that has really run up during the pandemic with the restaurant delivery business. It's a leading player in restaurant delivery. And then we're also seeing, as you mentioned, a whole lineup of others. Wish, the e-commerce site, Affirm, the installment loan site, just a number of them. Even on the calendar this week, there's a couple of $1 billion PE-backed IPOs. So there's just a big rush to get deals done before the end of the year. And we think they'll get done. A lot of strong companies. It's a good time to take a look at the IPO market.
So that was my last quick question as we go into 2021. Do you think this wave continues into the beginning of next year, into the administration changeover, or do things slow down? We've got about 30 seconds left.
We think it continues as long as the returns hold up. We expect it to continue. It should be a good year for issuance.